We know Google bought out YouTube 8 years ago, and of course, we all know Google from its online search business, which many of us use every day. But Google's footprint is a lot larger than just online searches. Josh Lipton takes a look now at just how ubiquitous Google has become in our lives.
When you think of search, you think of Google.
I use Google for everything.
Google Docs, Google Drive.
Mostly GChat, the Drive, and Google Documents.
Almost all the things that are coming in Google.
I have an Apple phone, but I still use the Google software because the maps are better.
There are 3.5 billion searches every day.
Okay, Google now.
But there's more to Google than meets the eye.
Navigate to the Golden Gate Bridge.
If you have a smartphone, chances are you're using Android, Google's mobile operating system.
Navigating to Golden Gate Bridge.
Android will run on 80% of smartphones sold this year, according to IDC. Been to YouTube lately? Google bought that company in 2006. It now generates an estimated $5.6 billion in gross revenue per year. And thanks to Google, the days of paper maps and those bulky GPS units are long gone. So what's next for Google? At the company's developers conference in San Francisco earlier this summer, Google said it wants everybody using its operating system, whether they're at work, at home, even in their cars. For Nightly Business Report, I'm Josh Lipton in Mountain View, California.
Paul Meeks has been a big believer of Google and its stock. He's portfolio manager and head of technology research at Saturna Capital. Paul, nice to have you on the program. I know you're a big believer in the stock. You say that if someone is going to start a portfolio from scratch today, one of the first stocks that they should buy is Google. But at $596 a share, it's hard to see like how much a return you're going to make on that investment. So make a case about why someone should buy Google today.
Well, first of all, even though the company's been 10 years since it's been public, it's still growing at a pretty rapid rate. I think for the next couple of years, both the top and bottom line will continue to grow at 15 to 20% per annum. And next year, on December 2015 earnings, the stock's trading when you adjust for cash at about 17 times earnings, and it's going to grow its earnings that year 19%. And so this is actually a one peg or sub one peg ratio stock, which is very compelling for a company in the technology space or elsewhere.
Paul, do they have a sufficient moat around their various businesses?
Tyler, it's a great question that you ask. They started dominating search on the desktop, and they've extended that dominance with Facebook on the mobile application. And I also think over time they're going to see a wonderful growth driver in what we call the Internet of Things.
What does that mean, the Internet of Things?
Now, about a year ago, they acquired a company called Nest Labs. And so what this will do is link very mundane apps in your life, not even non-technology apps, to the internet, and it'll really change your life. And it could be a monstrous market.
Mm-hmm. Yeah, let me just follow up on that a little bit. When we think of Google, we think of it as the king of tech, a real innovator, a risk taker. It has a lot of cash. It attracts some of the best technology talent in the world to the company. But that's what it's been for the last 10 years. But looking at the next 10 years, can it continue to dominate the technology world? We've seen other companies dominate, like I'm thinking of IBM or Microsoft, and then it didn't continue that way. What about Google?
I think Google has as good a chance as anybody else. It's tough for a tech analyst and portfolio manager like me. I've been doing this almost exclusively since the late 80s to say that they'll never slow down. I do think that they do have some runway for that 15 to 20% top and bottom line growth for several years. Now, the interesting thing about this company, unlike some of the tech titans of the 80s and 90s, it has already in 10 short years reinvented itself 3 or 4 times. So I feel very strong about their vision and their execution, and I think that they'll do well for the foreseeable future.
So you own the stock. I assume you would add to the stock your holdings at these prices. Which shares would you buy, the A's or the B's?
So first of all, I would buy the A share because that's the share class, GOOGL, that is most shareholder friendly. And what I would do, the stock trades 590 plus. Earlier this month, so not too long ago, earlier this month, it traded at 570. I think that's an interesting place to nibble. And the best place to buy more is where it's really shown great support over the last couple of years is a 200-day moving average, and that price is 564.
Mm-hmm. Real quickly, do you think that Google will ever pay a dividend?
I think that they will, but in the near term, I'm pleased that they don't because they have enough opportunities to reinvest their cash flow in high return on investment projects. When you see a company, particularly in the tech sector, start to pay very lavish dividends and buy back a lot of stock regardless of how high the stock has risen, then they're probably in mature or slowdown phase.
Very, very quickly, what's the biggest risk it faces?
I think the biggest risk, Tyler, is that I'm wrong and it fails going forward to continue to recreate themselves, to continue to be visionary, and they miss the next trend.
All right, very interesting conversation. Paul, thanks so much for joining us. Paul Meeks at Saturna Capital.
Thank you.
All right, since Google began trading 10 years ago, shares have risen an astonishing 1,300%. But here are 10 other stocks, 10 others that have done even better over that same time frame. See if you can guess some of them. Top spot, Keurig Green Mountain, the company behind those K-Cup coffee pods, up nearly 8,000%. Energy drink maker Monster. Online travel site Priceline, both up more than 6,000%. Then there's Apple, and then there's Alexion and Regeneron, up more than 4,000%. And rounding out the list, Netflix, Intuitive Surgical, Salesforce, and Western Digital. I hope you all bought them a decade ago.